long side. Here we are. We have a market maker assigned to Amazon that's doing quite well. There were lots of things that the individual assigned market maker to Amazon had chose to do right. And not only that, had taken very close observation. How did he do that? By writing down the right things. And on the opening bell, we have the left elbow gap down with that diamond pop holding this half bar right here. That time was 9.9. This was this half bar right here. This bar right here today is where we're going to be looking at. And I'm going to show you from the view here of what the high is. This is what the 3-minute chart has been doing with Amazon. We finally got that lower teeny reversal right here today from this long previous day's selling back over here on September 8th anyways. And that what we're looking at is we're going to blow up this part of the chart. Once again, we can see that the bars are the bars, and that's 912 right there. This bar right here was where the breakout bar had cleared it. It maintained the low end of it. This bar had maintained this previous low. And then you started to ascend very quickly to the breakout to this very high. And you can see all the diamond alerts going right up. But you can see them bid pops. Look at that. Bam, bam. You can see the diamond pops to the lows all the way up to those. But most importantly is that you know what this means at the reversal. Now, Leo, when you shorted right here, you could see here, as you stated in your own words, what made your decision again, and what the relationship of this and this meant together. Then the laggard, which is the 10-minute, and you came down and you tested a half bar over here at 213.50, and the Amazon print right now is 213.88 by 214.03. So we know within the bid and ask we're at certain critical levels where you finally got all these diamond pops. But then what is the relationship with the lower diamonds, and then the body of the price print going below the diamonds, and the body of the price print being weaker at the teeny line with the diamond, and what these kinds of things mean. And it's 45 cents a teeny. So tell me what you did right up in here in your reversal again.
Sure. The wicks there right at they could not penetrate the teeny line, and there was very strong resistance there.
What you would also say this half bar was also very strong resistance right next to this green bar, the upper bar here?
Right, I did catch that little short there down to that
okay.
At the bottom there. And,
oh, nice. So you got that debit short, and then you started re-entering another short.
Right. And it was pretty obvious to me at that point with that strong resistance that it was time to go short. And then we got that red distribution candle right next to the green bar. Oh. And so that made me feel better even.
Did it make you feel better because it was penny greater value than the last penny up value? Meaning that
exactly.
This meant that equals what you've been taught as a market maker, is that's penny price action weakness. Right. Okay. Keep going.
Yeah, when I got to that candle right there, I added another 100 because it.
And was it up towards the top where you couldn't take out the diamond highs here, the diamond reversals?
Yes. Right.
So you seen the correlation there, didn't you?
Right. It was, again, there wasn't any question there. It just seemed the right thing to do, and then it paid off. I've just been, riding that down.
Nice. Now that we have gotten made here, and it's going to come down and test this teeny line, would you be an aggressive short seller if we were to break below this half? Well, this half bar is 210.95, so we're going to have to get over here. This is the 213.50 bar. This is that high half bar consolidation to the breakout reversal highs. So if we come down and break this right there in the bid and the ask, that's going to be this in the platform. You're at 55 by 59. You're right there at that half hour, 213.50 column. So what I would like to know, but you're at 65. That means that there's strength at that teeny line. You know that 0.33 is holding. If we don't go below 30 here, we don't go lower there. But if we go towards 66, we're going to be teeny sideways. What would you do the minute that this happens? Should those things decline and you were to break that bar, that means,
it goes, time to go short another 100.
Okay. So you use the risk management discipline entry of 100 shares, and then as you were learning about volume entry management, is when would I apply some more? But every time I'm going to re-enter, I've got to make sure that the volatility comes up, 1 teeny, 2 teenies, and then comes right down, 1 teeny, 2 teenies, and then that this is just a bid pop between this bid and ask spread. When the 16 pennies wide, 5 by 21, you know what the public price spread is. This is your spread. Now, if this ticks higher, this goes higher, but if they sell below there, you know that they're selling the bid down in Amazon, right?
Right.
And let's take a look at that, what Amazon level 2 looks like. There's your bid and ask traditional level 2. Now, what the platform will do for you, key specifically, is it will tell you what side of these two markets. This side, they walk it higher. This side, they sell it down. And your bid and ask trend ratio, SMF market maker ratio, deciphers this public whole crap in here. And when they're buying up the spread, they're buying up that side of the market. But then if they sell this side of the spread 8 cents lower, then what will happen is, but they're not. They're buying up the ratio. You can see the ratio. The bid, see 44, 45. 42 was the last print. 42, 44. But if this is going up in value, then this is teeny breakout value, right?
That's right.
And once again, you're going to challenge a half bar over here, which you could gauge right now. This would be the first bar. That would be 214.68. The second bar over here is 214.80. Resistance 1 is going to be this area because that's where it broke down the most to the lows. And that's going to be the first challenge. You're at 49 by 52 pennies now. And then the second area is going to be 80 pennies. That's going to be this bar. With the amount of movement above 75 and 0.43, they're just kind of like going back and forth. See how the price spread is narrow range now?
Yes.
So now watch the sells. They printed the bid down and you dropped in the ratio. Let's see if they'll look at how wide that ratio is. Geez. Here you go. 40. If 40 prints, you go lower, meaning that you're weak there. But boy, that looks nice with the 10-minute behind it and a double diamond up, and you're above the previous half bar there, and you're taking out this whole little price area, this whole little train track of price. And let's do this now. There we go. Now, here we are. Here we are. Here we are. This is it right here. So you had 1, 2, 3 teenies up at 45 pennies a teeny, right? Which isn't a bad move. But now you've got the same thing happening here. With you got the wick going below the diamond, right, Leo?
Right.
And the thing about it is that the bid pop is to see if this bar can stay a high above it, because then you're going to keep going higher. And you would break higher here toward 90. And weakness is narrow range. There isn't no bid. So the thing about it is you would revert back to this half bar within the channel right here, right, Leo? That's 214.33. And you're 30 by 49 pennies, 19 pennies wide between the buyer, public buyer, and seller. And the thing about it is, you're printing lower here, and you're going to get weaker. You watch that half bar, and if you can't take it out, you can go in 100 shares up here at the top. You're starting to weaken, but not by much. So you did very excellent about coming out of the short at the bottom, identifying the turn, taking the debit ratio profits. And how many pennies did you make?
Yeah, it was over 300. I'm looking at your chart right now, but
That's okay. Well, it was
yeah,
probably quite a few pennies. 300 pennies is $3, and you probably got
that's right.
some long and some short. And,
Sure.
but the compounded penny ratio on each side of the trading, meaning that the long debit and the short debit, they added up to 300, didn't they?
Actually, it was more than 300. It was 300 on the short. Mm-hmm.
Okay. So you got 300 pennies
Yeah.
on the short. Did you get how many long debits out of there? 60,
I think it was
70,
only
80?
70.
All right, so you got 70 pennies. So that's added up, the total.
Yeah, 370.
370, so that's 3.70 debit ratio, trading long and short, and that equals $3.70 for Leo. And Leo had chose to understand where his reversal was up here and how his diamonds were doing what they were doing. There was some of this in there, and how they're sliding the wicks and doing all of this stuff within the bid and ask ratio of everything that goes on in the SMF platform. Does the SMF platform lag price, Leo, or is is it deceiving?
No, that's right on. I tend to deceive myself sometimes, but the platform brings me back to reality.
Very quickly, because look at that diamond low right now, and look at that last diamond low. There's weakness building. That's why I told you take that little 100 share short in here.
Yes.
And even if you go up, but if you land on it as support, and the diamond is sitting on support of that teeny line, you'd get out, you'd buy the cover. But once again, learning to apply the skills, learning the volume entry management, learning that you wait for it to come up and test so you can get the better price. And you do have a lower diamond right now, and this diamond here, these two diamonds, along with this diamond here, is going to be crucial, because you got to fall below them. You got to fall below this diamond. And see, I already got 100 share in this little price print, but still, if you take a look at the pennies in the VO1 column, that's 50 pennies top down in here. And now you're starting another one at 3 pennies. So that's what it was willing to give, was a teeny.
Right, and the current trend is still ticking down in the
it's
IR.
Below 75, yeah. And they're you can tell that they're currently printing this side of the market. Tells you when the ratio drops, you know they're printing the bid down.
Right,
and that
looks good to stay short.
That equals your short, right?
Yes.
Oh, look at here, Leo. You're below your half bar again. And this is all live right now, isn't it, Leo?
It is.
214 and a quarter, man, is half bar. Uh-oh, you got a wick coming down to this half bar. That's at 213.77 now. That's where it's going to hit. But, so watch this 213.77 bar now. And you can see they bid popped it right above there. And you can see that it's getting, you know, public support at the 10-minute period. So we got to see this weakness stay below 75. We got to print this current ratio down to 30. And we'll see what happens. The half bar is coming back into play at resistance. It's 214.25. Here, let's make sure it's in the video. It's 214.25. And
that's right. And
even if you go, rises to even
on the weekly.
Oh,
that's a rises to on the weekly.
Is that right?
Right.
That's awesome. So that's a major resistance area, and you're pointing back up here at 0.41. See, so they're walking the ask higher, which makes these prices over here go higher, and that's they're paying up the spread, aren't they? They're buying this. Right. They're buying that public spread, aren't they?
Yes.
And that's how you get those little pops in there, isn't it? Okay. All right. Yep. This is an excellent trade, right here, right now, live at 8:23 a.m. Pacific Standard Time on 9/12/2011, with an MMT assignment to Amazon.com, taking long debit, short debit ratios and entries and exits. Very good, Leo. Thank you.